time now for the markets, and some developments in Europe may have a positive effect on our soybean prices. That story coming up a bit later. That's right, Amy. Leighton Spann left us some good market headlines here. The U.S. loses its top slot as the top chicken exporter in the world. Analysts expect more cattle to head to market as the government ends the corn ending stocks in a big monthly report. For more than 30 years, U.S.-based companies have been the #1 chicken exporters in the world. However, the Food and Agriculture Organization released figures this month that show a change at the top. Brazil is now occupying first place according to the FAO. The report indicates the United States' slip to second place is due to an expansion in poultry by Brazil, along with a shrinking chicken industry in neighboring Argentina. In the beef sector, traders have spent most of the week looking forward to the Friday, June 17th Cattle on Feed report. Although this program is being recorded before the actual report release, we do have some projections from private analyst Allendale Incorporated. That firm expects to see increased cattle marketings and increased total on feed. Placements are projected to be smaller than a year ago. Meanwhile, the stronger dollar is ramping up concern among traders about beef exports. Well, really strong export demand has been a corner of the hog market in recent weeks. However, there could be some trouble for pork coming out of the grain sector. The stronger dollar prompted a sell-off in corn Wednesday afternoon. The fear is that this weakness in corn could lead to increased pork production. Analyst Elaine Koob addressed the situation with hogs recently.
The slaughter numbers throughout these past couple of months have been pretty stable. So that's not really a supply concern, is not what has been moving these hog futures lower. And I'm looking at them to continue to consolidate around the $88 level. But here again, the futures contract traders themselves are really responsive to corn prices, and we see them trading in a very wide range. The July hog futures traded in a $4 range just this week.
It's not the hogs, but catfish that we focus on with our trivia quiz this week. Where does farm-raised catfish rank in the list of food and seafood consumed by Americans? Is it number 2, number 4, number 6, or number 8? I'll tell you at the conclusion of the markets. Well, the June 9th USDA crop report, as we said earlier, featured a drastic change for corn, as well as a surprise on the soybean side of the ledger. Farmweek's Leighton Spann chatted with Extension Ag economist John Michael Riley the day of the report's release.
John Michael, let's begin with new crop corn, what the report had to say. What change was made in the figure, ending stocks?
The new crop number came in at 695 million bushels for ending stocks, which is quite a drastic change from the May report, which was at 900 million bushels, and even a bit of a shocker from pre-report expectations of 800. So that was one of the shockers for the day.
Now, what about production outlook? That was ending stocks, but how did production change? Well,
they've lowered the number of acres for corn, yield per acre. They kept that constant just because it's still pretty early in the growing season, but they did lower the acres due to the slow pace of planting and the fact that some of those acres might be switching to other crops.
All right, as far as corn, what are these figures expected to mean for prices the rest of this month?
Quite a bullish number, especially due to that low ending stock number for the 2011-12 growing season. So the expectation is that this is just going to add further fuel to that corn price.
All right, let's change gears to soybeans now. Was there a change made as far as ending stocks in soybeans?
There was. It was raised 30 million bushels from 160 in May up to 190 this month, and pre-report was thinking it was going to stay the same at 160 from the May report. So a bit of a change a surprise on both sides there. The biggest thing is that they raised the 2010-2011 crop carry in, and then exports were reduced a little bit, which made that ending stock number just a little bit bigger. So you know, that was probably one of the bigger surprises, that in corn, in terms of this report that was released this morning.
Are there really any understanding of why that kind of change was made?
Well, there's nothing really on the production side for soybeans. It's primarily due to the fact that they raised ending stock for 2010-11 up 10, and then they reduced exports by 20, which accumulates to that total 30 number, raising 30 for the ending stocks for the growing season that we're currently in. So that's where it all came from. Nothing on the production side, though, for this growing season.
All right, so for, say, the next month, how are soybean prices expected to react now?
Well, it's a bit of a negative news for the soybean market, but just given the fuel that corn is going to be seeing, it's probably going to limit some of those losses. But I think that soybeans will probably react negatively to this news, and might be down just a little bit.
There is some positive news to be had for the soybean sector. It's a result of some issues in Europe and Canada. Analyst Sue Martin says these issues will support soybean oil and as a result push the bean market higher. Sue explained it this way on the Market to Market program.
When you look at Europe, you've got in Germany rapeseed problems. It looks like their crop could be down anywhere from 10 to 20%. You know, France and other parts of Europe are very dry and are having issues. But I think that, and again, then you look at Canada and another place where they're having issues getting rapeseed canola planted. I think that that all comes back and supports soybean oil and pushes that market higher. And in the past, November beans have tended to rally $1.75 over the last, I want to say, 4 years for a summer rally.
Let's give you the trivia question before we roll the feature story. C is the right choice. Farm-raised catfish is the number 6 position on the list of fish and seafood consumed by Americans.